Welcome back to Storm Stock Solutions. I'm Grant Mercer. It's the pre-open edition, and as we gear up for this holiday stretch, let's bring some clarity to the chaos in today's markets. Coming into this morning, the tone is cautiously optimistic. According to reporting from MarketWatch, you've got a few very clear pockets of strength: defense, space, and parts of media and betting, even as the broader tape has struggled to find that classic December Santa Claus rally. Traders are watching whether the final sessions of the year can finally unlock some of that seasonal optimism. Let's start with the big individual story lighting up the tape. Huntington Ingalls Industries. MarketWatch reports the military shipbuilder has ripped to fresh record highs after the U.S. Navy tapped the company to design and build a new class of small frigates. That's not just a nice headline. It's the kind of multi-year contract that can reshape revenue visibility and margin expectations. Defense has quietly been one of the more resilient corners of the market, and moves like this reinforce the idea that government spending can act as a stabilizer when other sectors wobble. Staying in the future hardware lane, space remains red-hot. AST SpaceMobile, a rival to Starlink, is surging again after President Donald Trump signed an executive order aimed at ensuring American space superiority. Policy headlines like that don't guarantee fundamentals, but they do tend to pull capital and attention into the theme. Traders will be watching if the bid in space names broadens out, or if this stays concentrated in a handful of higher beta plays. In the media and entertainment world, the drama is all about deal-making. MarketWatch is out with a piece noting that Larry Ellison is now personally guaranteeing $40 billion of the financing behind Paramount's $108 billion bid for Warner Bros. Discovery. That's an AA-popping personal backstop. For the market, it raises big questions. Does this accelerate consolidation in streaming? And how do regulators react to a potential reshaping of Hollywood's power structure? Media and streaming names could see some headline-driven volatility as investors handicap the odds of this actually closing. On the broader market sentiment side, there's still talk of that elusive Santa Claus rally. As Francis Yu highlights at MarketWatch, despite a rough start to December, historical seasonality hasn't completely broken. Professionals are watching whether lighter holiday volumes can actually work as a tailwind, fewer sellers, a bit of performance chasing, and maybe a lift into year-end, or whether macro caution wins out and keeps a lid on things. That narrative can matter for indices because it influences how aggressively managers want to position in these last few sessions. Turning to areas of strength, traders are watching more tactically. Gaming and betting are front and center. One MarketWatch story digs into why younger crypto-heavy traders are also prime customers for platforms like FanDuel and DraftKings. The takeaway: a growing overlap between speculative digital asset behavior and sports betting. That's supportive for the long-term growth story in legal gaming, but it also underlines how sentiment in one risk-on arena, like crypto, can bleed into another. Like online sportsbooks, when one gets hot or cold, you often see echoes in the other. Now the flip side: areas to handle with care. AMC Entertainment remains under heavy pressure. According to MarketWatch's Tommy Kilgore, the stock just logged a sixth straight record low, even as the new Avatar sequel posted a big opening that ultimately failed to impress the market. On top of that, AMC disclosed another debt agreement amendment tied to selling more shares. So you've got dilution concerns layered on top of questions about box office strength and the long-term health of the theater model. For traders, that's a combination that usually means elevated volatility and a lot more questions than answers. Let's talk about some under-radar stories I'm keeping on the watch list. First, back to DraftKings. MarketWatch's Weston Blasey reports that the Jake Paul, Anthony Joshua fight almost cost DraftKings $100 million. But everyday bettors lost instead, giving the house a strong night in what's otherwise been a tough year for sportsbooks. If you're following the betting theme, this is a reminder that quarter-to-quarter results can swing on a small number of big events. Names in that group can move sharply around: fight nights, playoffs, and marquee matchups. Another sleeper angle is the lottery and windfall conversation. Charles Passy at MarketWatch breaks down why winning a $1.60 billion Powerball jackpot won't actually make you a billionaire. Taxes, payout structures, and all the little frictions that eat into the headline number. Beyond the human interest angle, it ties into the broader theme of how people think about sudden wealth, risk, and what's enough. That kind of mindset story doesn't move a ticker today, but it shapes how retail money behaves over time. So, to recap your pre-open setup, defense and space are showing strength on contract wins and supportive policy headlines. Media is in focus with Paramount, Larry Ellison, and the Warner Bros. Bid. Sports betting and gaming remain active, without DraftKings in the spotlight, and theaters, led by AMC, are under real pressure as the market questions both capital structure and the post-pandemic box office story. All of this is swirling under the surface of a market still debating whether a year-end Santa Claus rally can finally show up in the last days of December. I'll be back with intraday updates once the market gets rolling to see which of these themes actually catch a bid and which fade into the background as volume kicks in. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.